So we're all gathered here for this session to learn how we can exploit the market in 3 easy steps. Well, those 3 easy steps are knowing what to trade, when to trade, and where to enter those trades. So our agenda for this session is to help us understand what to trade, when to trade, and where to enter. We're going to discuss some powerful Forex facts briefly. Then we will get to those 3 easy steps we can use to exploit the market. We're going to take those 3 easy steps and see how we can apply them to our trading so that we can earn while we learn to become a professional Forex trader. We'll see what opportunities lie before us. And if there's time left over, we want to get you in and out in a timely fashion. We'll hold a question and answer session, but feel free to type your questions into the chat box as our entire presentation goes on. There's people here to answer those questions, as well as you can email support@marketcheckdown.com if we don't get to any of those questions during our session. So to start off, some powerful Forex facts. Professional Forex traders are amongst the highest earning people on earth. Doesn't matter what country you're from, United States, Britain, Japan, Taiwan, Australia. It does not matter where you are from. Professional Forex traders are amongst the highest earning people on earth. The Forex daily trading volume is 4 times the global gross domestic product. With the $5.3 trillion traded each day, you could pay off the U.S. national debt in just 3 days. There is no other market in the world where one person can take a laptop and make more money than a Fortune 500 company. I'm pretty sure each and every one of us got into the Forex business because we were interested in making some extra money or making all of our money from the Forex business. There's no other business where a single person can sit down with a laptop and make more money than some of the biggest companies around the world. Let's take a look at the volume within Forex compared to other financial markets. The London Stock Exchange, they trade about 7 billion US dollars per day. The Tokyo Stock Exchange, 18. The New York Stock Exchange, 20 billion US dollars per day, and the global commodities $400 billion per day. The Forex spot market, meaning traders like me and you that have that laptop or just have their platform, their computer, and are trading, that's nearly $1.5 trillion per day in the Forex market. If we start including hedge funds, businesses, institutional traders, and all those other people, we get to nearly $4 trillion per day being traded in the Forex market. If we add those together, that's over $5.3 trillion per day. There is easily enough money for us to carve out a little slice of that pie that we need to live the lifestyle of our dreams. So let's get into it. What pairs should we be trading? One of the beautiful things about Forex is that there's not a lot of stocks or different things that we have to keep track of. There's a small number of currency pairs, and if we actually know which ones to trade, we can limit that down to a handful of pairs that we should definitely be keeping our eye on. To do this, the easiest thing to do is just look at which pairs are the most popular, which pairs are the most commonly traded. Now, because in every single trade there's 2 currency pairs, the total of these popular pairs is going to equal 200, but we can see that the US dollar is involved in 87% of trades, the euro 33%, the yen 23%, the pound nearly 12%, Australian dollar. These are some of the currency pairs that we should be keeping an eye on. At Market Checkdown, we found the 13 highest probability pairs or most probability pairs that you should be keeping an eye on, that you should be looking to trade. Sometimes we add in 2 or 3 extras for those blank spaces. Go ahead and take a picture of this slide right here, those 13 pairs, so that you know which ones you should be keeping an eye on. The reason you want to keep an eye on these pairs is their spreads are very tight, high volatility, meaning your orders are filled instantly. There's not a lot of slippage or gaps within these pairs. This is the best way to maximize your money when you're at your terminal, by trading these popular pairs. So if you know the 10 to 15 pairs that you should be looking at to trade, when should you be looking at them? When should you be trying to trade them? During the Tokyo session, it'd probably be wise to trade the pairs that are common to that session, meaning the yen, the Australian dollar, the New Zealand dollar. The London session, we should be looking to trade the euro, the pound, the franc, and during the New York session, we should be looking to trade the US dollar and the Canadian dollar. However, if you were here for our previous presentation where we talked about strategy, where we talked about what we use to actually identify pairs, structures, patterns, when to get in, when to get out, daily cycles, different techniques that they use to take your money or different techniques that we can use to take some money, you would know that during the Tokyo session, we could trade whatever pairs are working the strike zone. During the London session, whatever pairs are working the strike zone. And during the New York session, whatever pairs are working the strike zone. If you're unfamiliar with the strike zone, or if you're unfamiliar with how a pair works the strike zone, take 20 minutes out of your day, watch our previous presentation called the Market Maker's Playbook, and you're going to realize how you can identify which pairs are performing and which pairs are working a strike zone to help you identify high probability setups. To help us understand where we should be entering, we do kind of want to review, or if you didn't see our last presentation, tell you about strike zones. A strike zone is 3 or more reliable indicators lining up on or near one another to determine the highest probability price point for entry or patterns, or basically the hot price point. Where is price action going to hit before it moves in the other direction? That would be a hot price point. The indicators, some of the indicators, or the 7 most powerful indicators that we use at Market Checkdown, we use EMAs, exponential moving averages. We use session boxes to help us determine, hey, which pairs should be lining up at which time on the chart. We use ADR markers. We have a custom indicator called the daily dashboard, which gives us a ton of information on each currency pair that we're looking to trade. We use TDI, or the Traders Dynamic Index. We use the floor trader pivots. We use a daily high-low. And we also use another custom indicator called the strike zone alerter. We'll share a little bit more about that in a minute or two here. This is what our charts look like. As you take a look at our chart, this is the daily dashboard over here. It gives us tons of information: current price, the spread, the high of the day, the low of the day, how many pips away we are from the high of the day, a ton of different averages for the pair, pips to the open, gives us daily candles, it gives us pin formations. This is a very useful tool that we have. We use floor trader pivots, a daily high-low. We use an ADR marker. We use these session boxes, and I'm going to point this out right now. This light blue box right here is the Tokyo session, and also included within that would be the Sydney session. Market Checkdown, we just refer to it as the Tokyo, as they overlap quite a bit. This area here marks the transition from the Tokyo to the London session. This box here marks the transition from the London to the New York, and this red box actually highlights when the New York and the London session are overlapping. The blank space between the light blue box would be just our regular New York session until the Tokyo and Sydney session starts again. Our TDI can be found down here. And the strike zone alerter, you can see in the bottom right corner. So this is what our charts look like. This is going to be useful in just a moment as we break down some of the charts and we apply these 3 easy strategies to exploit the market to some charts in just a moment here. So where do we enter? We've talked about strike zones, the indicators that we use. Where are we actually entering? Well, we enter within our strike zones. We enter at those hot price points when we can identify a candle pattern. Now you might be saying, hey, there's thousands of candle patterns out there, so how do you recognize which ones to use? At Market Checkdown, we use some basic candle formations. This is another one. Take a picture of this slide here, as these are the basic candle formations that we use at these highs of the day or these lows of the days, or our hot price points within strike zones. These are the candle formations that we use to take entry. Here's one page. We use morning stars, evening stars, and their variations, shooting stars, spikes, pins, haramis, hanging men, hammers. We also use dark cloud covers, piercing lines, dojis, very, very powerful. Engulfings, we use shooting stars, spinning tops, railroad tracks. There's a few more other than just these candle formations, but these are the very, very basic candle formations that we use, and these are the ones that we recommend you start with, learning to recognize at those hot price points. So let's put it all together. For example, we show up at the London session. Now remember, once again on our chart, this is that transition period. We should be looking to trade those pairs that are home for that session. So a pound currency pair is a good pair to trade. And we're going to look for a strike zone at the low or the high of the day. So here's the previous day low. We've got TDI telling us another thing. I'm sure there was a floor trader pivot within this chart. We marked this one a little bit after. This was our strike zone that was drawn in. As you can see, we've got this is a spinning top. It's got pins on it. It's also an engulfing candle formation. This is where we would look to get in on this pair at the right time, and we would be trading this pair long. Now, if you're unfamiliar with how we know whether we're trading long or short, once again, go back. You can watch the Market Makers Playbook webinar. It's going to be about 20-25 minutes, and you'll understand why we're looking to trade this pair long at this time period. So here is a classic example of just knowing, hey, what pair to look at the right time and knowing what to look for on the chart when it's time to get into the trade. It's very, very simple. Here's another one. Here's the Euro Australian. You can see that during that session when they're both rolling over, once again, this is when it makes its move. This is when it sets up. It gives us a double top, a little evening star. There's some pins here. There's a hammer. And it starts its move. If we take a look, we've got our session box. We've got our TDI. There's a number of things here telling us that this is the right pair at the right time, and it's time to get in. If you're not fully understanding, hey, how do you know these things? Well, that's what we do at Market Checkdown. We put this into practice. At Market Checkdown, we're going to dive into some of the things that we do a little bit later, but we help you to identify these setups, these potential trades, where you should be getting in, what you should be doing, and we help point those out to you so that you can get into the trade and make some money. Once again, that's why all of us got into this business, was to make some money. Here's another example, and I really like this one because this one's the Euro Canadian. And remember how we were talking about you want to trade the pairs that are setting up. It might not always be in its home session, although oftentimes it is. This pair actually set up in the Tokyo session. It's a Euro Canadian. It typically does not do that, but occasionally it will. The big money people, the market makers, they like to switch things up on us so that we can't trade with 100% accuracy. We need to learn to recognize the slight differences. And here's a perfect example. Euro Canadian sets up in the Tokyo session. But if you look, this pair doesn't fully start moving to the New York session. So it gave you its setup early, held it for a little while, and then finally gave its run. We had a strike zone, plenty of candle formations within here, dojis, pins, high of the day. At the right time, taking a look at our TDI, we've got EMAs within there pointing us all in the right direction. This is a classic example of just knowing, hey, you need to know when to look, where to look, and how to get in, but sometimes there's slight variations on it. Here's another one, the dollar yen. End of the Tokyo session is when it sets up. Take a look at our TDI. We've got divergence within our TDI. We've got EMAs. We've got a double bottom. We've got pins. We got a morning star. Everything within our strike zone session boxes are letting us know what's going on. We know what pair to look at. We know what time to look at it, and we know what to identify to get into this trade to make money. And one last example of putting together these pieces to exploit the market in 3 easy steps is the dollar Swiss. Once again, this identifies that transition from the Tokyo session to the London session. Dollar Swiss, Swiss pairs we're looking at during that European session. Here it is, European session. We've got a strike zone at the low of the day with the 50 EMA. Got a morning star. This is a spinning top as well as a piercing line. We've got our TDI. We've got our ADR marker. There's a number of things going on with this pair. This is where the setup is on the dollar Swiss, happening in the European session. But if we take a look, price did not fully make its move till the New York session. These are things that we can identify. These are habits that we can see within the currency pairs because we know where to look, when to look, and what to identify for entry. Now, once again, if you're unfamiliar with the strategy, just take 20-25 minutes to get the basics of our market maker's playbook, and you'll know why we're looking for this pair to go long. As you can see, we had some more examples, but I want to keep you guys on time. I don't want to hold you longer than we said we would hold you. Therefore, if you're looking for more examples of this, if you want to see, hey, how accurate are we, and we're going to get into this in a little bit, you can go to marketcheckdown.com. There's a results page, and you can find thousands of charts of our results of pairs that we called out for our members and them go in the right direction. Sometimes, about 10% of the time it doesn't go the direction that we say, but with 90% accuracy, we're telling members which way it's going to go so that they can know what to identify to make some money. So if you want to see more examples, marketcheckdown.com/results. You can find thousands of charts. You can dig through them. It'd be very educational and very beneficial if you would want to do that. So just a quick review. The 3 easy steps to exploit the market are track the most productive pairs. Don't waste your time looking at pairs that are unproductive. Use indicators to locate strike zones. Use those indicators at the right time so that you can know when to use a candle pattern to get yourself the best price point for entry, whether trading long or short.